morning, everybody. Welcome to the Trading Market Technicals Morning Call video for Monday, October 29th. Quick admin note for those of you who are living in the East Coast, you know Sandy's on its way. She's going to probably hit hard stuff tomorrow night about 8 o'clock. That being said, New York Stock Exchange is closed today, the floor as well as the CME. So electronic trading will continue. We're supposed to have some pretty bad power outages, so I'm just a quick note, if you don't see the morning call tomorrow morning, it's probably because I have no power. And if you are trading electronic, be very careful if your power goes out and you have positions on. So today and tomorrow will be even more so to practice your stops. Make sure your stops in place. All right, so on with the S&P. Let's see what we have last week. Last week, Dow and the S&P was led to the downside, dropping 1.77 and 1.4% in the S&P. More aggressive indices as the Russell 2000 and NASDAQ, they fell about 0.94% and 0.59%. So they fell, the aggressive indices fell less than the Dow and the S&P. So that's really kind of a positive sign. We also, S&P did a pretty good job holding that 1400 last week, and that's also a psychological level. So this week is going to be really critical because I expect some definitely a pickup in volatility going into the new year, but I do see a pickup in volatility and risk on, risk off type sentiment continuing, where the bulls and bears are battling each other for that one particular pivot, whether it be a low or a high. There's a lot of indices, and I'll show you in the charts, are at now support, pivotal support, that's going to need to hold. The bull's going to have to really step up to the plate. Otherwise, 1375 is going to be my next target in the S&P. There's 1375 low. And then, of course, we would reevaluate. Copper, same thing, has been falling. But now, on Friday, we did put a hammer candle. I'll show you at support. And that's also another little positive sign here. Also, most of the indices are, half of the earnings, are out already. So that's also a good sign. We do have some other big catalysts coming up, some decent earnings for some big bellwether companies. But half of it is gone, I think that's also a good positive, as well as Apple news. A lot of that uncertainty in Apple has also gone. Also, Apple hit our target on Friday at a 588. So good analysis on the Apple trade if you were trading Apple. And we're going to look to see where Apple goes from here. Okay, now I do think that the markets will start discounting what's happening, but not until some sort of I think a one big flush down would really have it. Would really do it, and that would actually shake all the week longs out, and then I think the market would then start building a base and drifting higher into the holiday season. Now, come next year is another story, and that's something that we're gonna, we're here for short-term trading, so we're just looking. We'll look at as we get closer to the year end. Okay, now one other thing too is that let's talk about the dollar. As you know, the dollar had a good week last week. Was holding some lows, some pivotal lows, and started to rally, and that put pressure on stocks and commodities. And I do see the dollar, again, and we talked about being that safe haven currency. I do see the dollar picking up steam. So that's something that we're going to really need to keep an eye on. So let's go into the charts. And I want to show you some indicators before we walk in here. Copper. As you can see, there's a hammer candle here, right on support. You can't see it because of the support line. But if you see that here, we need to hold this. Now, if copper doesn't hold, I would expect the 340 and then, of course, testing that lower 330. That's not going to be a good sign for the markets if copper can't rally. So this is at a pivotal, and you'll see my theme here going into the charts. This is a key pivotal support that copper needs to hold. Very, very important. Look at the dollar. The dollar held this low, this pivotal low, and has now, actually, if you look at it, you can see, this is on a weekly chart now, guys, okay? You can see that this is either flagging right now. So this could be a bear flag, or can dip into the 79 area, hold, and then roll up, start to roll higher again. So that's something that we're going to continue to monitor and keep an eye on. And that's a weekly chart. So the weekly chart broke this 8-day momentum average here. So that's a positive and actually held. So we need to really watch what the dollar is doing, and also the euro for that matter. Okay, let's take a look at the two indicators where I like looking at. Here's the NYMO. The McClellan oscillator really didn't move much. As you can see here, we're stuck in this range. So this tells me that we're not oversold. In the shorter term time frames, we're oversold, but our daily charts, that we can move lower, much lower. And I'd like to see a spike down here. Believe it or not, I'd like to really see momentum kicking up to the downside, shaking all the week longs out, and then I think we have some sort of a tradable bottom here that we can actually rally and move higher. Okay, Nazi, still on a sell signal. We've been on a sell signal for the last 5 weeks. 1, 2, 3, 4, 5. And this is a great little indicator to show you where we've been. Now look at this. We're selling off. Now this could just be a bull flag here in the S&P weekly chart, right? Could be a bull flag. So we want to see what it could be, what it can't be, and when price start to tell us and starts to, and the setup start to take shape, then you're going to say, hey, you know what? This is more of a bull flag here. I'm going to look to buy pullbacks and look for a rally. But right now, this has not happened. And as he's still on a sell signal, this hasn't bottomed, so we still got a little bit way to go here. What this week or next week should give us a clue if we're really rolling lower or we're going to start to move higher here. Okay. Now let's move on to the charts. 5-minute chart, a 10-minute chart, just to show you. After the big move on Monday, we've just literally consolidated. I mean, literally just consolidated here. We really haven't done much at all. So that'll tell you that we have inside days, and if we have inside days, don't expect much price movement, and that means that we want to be looking for, you know, some sort of a catalyst to trade, a stock to trade on earnings, a downgrade, what have you, bad news, good news on the stock, and you want to look to kind of ride that trend. And as you can see here, there is no trend for the last 3 days. Chops, a big chop fest. So for those of you who are trading, the first 15 minutes is really going to be give you an idea. Now, obviously, you could have faded this little area here, but we really haven't gone much. I mean, you're talking, you know, on the spiders, 2 points on the spiders, which is really nothing for a $140 stock. So that's something that I just wanted you to guys keep an eye on. Okay, weekly chart. Let's take a look at the weekly chart of the spiders, and then my theme here. Look at the support. Right on the 20-week moving average, excuse me. And as you can see here, we're unwinding our overbought reading in the stochastics, but still at support here. So this week's going to be very, very important. Take a look at the daily chart, and I had this little theme here, like maybe this goes sideways and start to move up a little bit, and we had this. Oh, let me just get that right there, and here, and then maybe we roll back down again. Now that does not have to happen. This is just a question mark here saying maybe this does happen. We rally and then we move back up again. But again, 3 inside days, indecision candles, and then here's what's happening. Stochastic starting to trying to hook here, and our MACD daily chart is just showing continued selling. Now we do have positive divergence though on a 60-minute chart. Here's the S&P 500 cash 60-minute positive divergence. Look at the arrows. Positive divergence, look at the arrows, and this is 60-minute. Now, can we rally? Watch, last time we did, we've had it here and here as well. Now, here we didn't have it. If you look back here, and just want to get you guys, excuse me 1 second here. We didn't have that here. If you could see here, we kept on selling off. So we do have a little bit of positive divergence like the last time. I want to see if this is going to actually take shape. So something to keep an eye on, okay? So if you are short or looking to get short the market, we're starting to develop positive divergence here on a 60-minute chart. Now, we're down about 8 handles in the S&P. So it'll be interesting to see if this positive divergence kicks in. It might not in the morning, but it might in the afternoon. So just use caution, okay? We are getting positive divergence now on a 60-minute chart. Okay. Take a look at the spiders daily. Same thing, inside day here. S&P, very similar as you can see from the S&P cash. Momentum indicators all pointing lower, continued, and this is here starting to hook up a little bit. Doji Star, 3 inside days, and we're sitting on support right about here. Right about here. So our next area is going to be 138, right up in here. That'll be the 200-day moving average when and if it does get down here. Okay, 30-minute chart S&P, as you can see, this area here, still within our support, key pivotal support. If we lose that 138, 140, excuse me, 138 will be S3, and then of course the 136. If you look at the chart below, you'll see that 136 will be the next pivotal low. So pretty ugly if we do lose the 140 level, which would be the 1400 in the S&P. That's going to be the key pivotal support area to be looking for this week. Bonds had a big uptick, as you can see on the daily chart. Money flowing back into bonds, and of course the U.S. dollar, and that's why we had our sell-off, because of fear. Now, I don't have it on the VIX, but the VIX actually spiked pretty hard from 14.5 to 18.5. That's a pretty big move. So maybe we digest, we rallied for a couple days, and one more sell-off. Just an assumption. I'm not trying to. This is not tradable, but you always want to be prepared. Diamonds, just sitting on the 200-day move now. So you see that we're at support, big support, and we're either going to need to rally from here, or test it one more time, or maybe breach it and then roll back up again. Otherwise, I think you're going to have a lot of sellers come out of this market. We don't have about 8 weeks left of the year, and I think that's going to be really important. Okay, take a look at XLF holding well, sitting on the 50 again. Theme today, 200-day IWMs, and this is interesting. Although we had a lot of selling come in, the 200-day moving average held for the whole week. And I would expect that this would really start to sell off here. But the 200-day held pretty much all week. So we'll see. Let's keep an eye on the Russell. Again, a bullish development that it did hold and actually closed lower, less in percentage-wise than the Dow and the S&P. And the transports, same thing. Doji, 2 side days, we're sitting on the 20-day moving average here. We're still below the 50 to 200, so the chart is still ugly. But it is maintaining this area here. And this is a pretty big area. If you look across this hole, you'll see how many times we hit this pivotal low. Very important. Apple. Take a look at Apple. I had this over here for the last week and a half or so. 588. Hit our target. 588. Right there. 200-day moving average, and that held. Big selling, and we actually recouped. So, where does Apple go from here? Well, today, I'd like to see Apple start to really chop around here a little bit. Your buy-in is going to be really the high here, 615. You can nibble in here if you're really looking for, to manage risk. Easy to manage. The thing is this: if you start to nibble in this area here, this candle's a large candle, 615 to 588. That's a pretty decent-sized candle. So I'd like to see it maybe dip a little bit lower and just, kind of close your eyes a little bit and buy a little bit, very little, and your stops would be below the 200-day moving average. Because if this 200 is lost, next low you're going to see is this 520, this pivotal area right here. So depending on obviously depending on your risk tolerance and your trading style, I would look to somewhere pick a spot to buy in this area. And then for at least a test up in here to the 20-day moving average. So you're looking at least 630 to 640. This long-term trend line, which would be resistance and or the 20-day. That's my looking. That would be my spot. Look to buy a little bit here, and then try to buy a little bit before the last low. And then obviously stops would be right underneath the 200-day moving average. But again, good sign. It held. So now it's another bullish development. So we're getting some bullish developments approaching us. SMH is looking good here, starting to break back up again to 20. Still needs a lot of work, but again, Bollinger Bands are tightening, so looking pretty good. And the Qs, lastly the Qs. 200-day moving average, of course, sitting where Apple was sitting. So we're looking okay that we can rally. But I think that if we don't rally today and we continue a sell-off, then I think all bets are off for the upside for at least a couple of days, and let's get a flush lower to end this sell-off, and then look to start buying here and buying dips going into the new year, going into the end of the year. Seasonality tendencies right now are starting to turn bullish, and I could see it on the charts and I could see it fundamentally. We just need we don't need another debacle with earnings. I know, as you know, elections are out. I guess a week or so. So that's going to eliminate another uncertainty, and we're going to see what happens here. Now, anything can happen, and this week's going to be very interesting. And next week with elections, it could be very interesting as well. So just be on your toes. Remember, guys, today, if you're trading in the Northeast, if you're trading electronically, use your stops, because if your power goes out and you don't have a backup, your order is going to be out there. So just a word of caution. And again, as you know, New York Stock Exchange is closed. And they're probably going to close tomorrow as well, being the grunt of the storm coming in around Tuesday, around 8 o'clock or so. So please be careful, be safe out there, and we'll see you tomorrow, hopefully, if no power goes out. Have a great day, everybody.